Welcome to today's Explainer. I'm absolutely thrilled to have you here. Look, if you're a chartered accountant, a tax professional, a business owner, or even a CA student grinding for your exams, you already know the landscape of Indian taxation is going through a massive, monumental shift. We are officially packing up the legacy Income Tax Act of 1961 and moving into the brand new, modernized Income Tax Act 2025, which kicks in on April 1st, 2026. Today, we're zooming in on the absolute bedrock of taxpayer identity. We are unpacking Section 262 of the 2025 Act, which is the new boss when it comes to the Permanent Account Number, or PAN. So, let's dive right in and figure out exactly what's changing, what's staying the same, and how you need to rewire your practice.
To get us started, I want you to picture a really practical, everyday scenario, something you could easily face in your office tomorrow morning. A client walks in. They don't have a PAN, but they urgently need to execute a high-value, specified financial transaction. Now, under the old 1961 Act, we'd all just blindly reach for the same familiar form, right? But under the new Income Tax Act 2025, what is the legally compliant alternative now? How do you keep this client out of hot water? Keep that specific question in the back of your mind, because we are going to solve it together in just a few minutes.
Okay, here's our roadmap for this explainer. First, an introduction to Section 262. Then we'll hit the detailed provision rules, walk through a practical case study, cover compliance and documentation, warn you about common issues and pitfalls, and finally, wrap up with a summary and key takeaways.
Section 1. Introduction to Section 262. So, the overarching goal of the Income Tax Act 2025 is to give us a streamlined, simplified, and truly modern tax code. And Section 262 is a perfect example of this. It acts as the brand new central hub for everything PAN-related. Now, look closely at this fundamental shift in terminology. On the legacy side, Section 139A of the 1961 Act, we lived and breathed the term assessment year. We've said it a million times. But now, under Section 262 of the 2025 Act, the law universally adopts the term tax year. And guys, this isn't just some cosmetic find-and-replace update. It is a structural shift that will reflect across literally every form and annexure you touch. Going forward, you will strictly use tax year.
But hey, don't hit the panic button just yet. This beautifully illustrates the government's transition philosophy. While the legal references and terminologies are getting a major 21st century upgrade, your existing infrastructure is totally safe. The official guidance makes it crystal clear that administrative frameworks, like your current PAN, your TANs, and the FACES assessment structures, will carry over seamlessly. Your client's actual PAN card doesn't change, but the law governing when you absolutely must use it, yeah, that's definitely changed.
Section 2. Detailed Provision Rules.
All right, let's talk numbers. Specifically, this absolutely crucial statutory limit, 5 lakh rupees. Under Section 262, if someone doesn't have a PAN, they are mandated by law to apply for one if their business or profession's total sales, turnover, or gross receipts cross, or are even likely to cross, 5 lakh rupees in a single tax year. This is a massive compliance checkpoint for small business owners and freelancers. If those gross receipts are ticking past the 5 lakh mark, grabbing a PAN is no longer optional. It is a strict, hardline legal requirement.
But what if we're not talking about a business owner crossing a threshold? What if it's just an everyday individual making a massive financial move? Well, this is where Section 262 locks hands with the new Income Tax Rules 2026. Specifically, Rule 159 lays out a very comprehensive list of high-value transactions. And Section 262(1)(f) drops the hammer, making it absolutely mandatory to quote a PAN on all documents tied to those transactions. Buying a fancy new car? Opening specific bank accounts? Buying real estate over the limit? The law demands a PAN to ensure there's a clear, traceable data trail.
Let's make this concrete. Section 3. Practical Case Study.
So let's bring back that scenario from the beginning of the explainer. You have a resident client sitting across your desk. They do not have a PAN, but they need to execute a specified high-value transaction, maybe buying a piece of property or locking in a huge fixed deposit. This immediately triggers Rule 159(2) of the 2026 rules. As the tax professional in the room, how do you get this deal done legally without that PAN?
If your muscle memory just screamed, "File a Form 60," stop right there. Under the Income Tax Act 2025, Form 60 is officially dead and buried. The correct 100% legally compliant alternative is the brand new Form 97. The transition FAQs explicitly state that people without a PAN can still enter into these Rule 159(2) transactions only if they file a declaration using Form 97. It is the total replacement for Form 60. So please, do yourself a favor and update your Office templates right now for any transactions happening on or after April 1, 2026.
Moving right along to Section 4, Compliance and Documentation.
Now, filing this new Form 97 isn't just about blindly checking boxes. There are strict workflows. Step 1. You absolutely must verify that the person's estimated total income for that tax year will stay below the basic exemption limit. If their income is actually taxable, they shouldn't be messing with Form 97 at all. They need to go apply for a PAN. Step 2. Once you've verified the income is below the limit, then you submit the Form 97 declaration. And Step 3. Remember that Aadhaar is deeply integrated into this new machinery, which actually brings me to my next point. Section 262 firmly backs Aadhaar integration. The law explicitly says that if someone doesn't have a PAN, but they do have an Aadhaar number, they can legally quote their Aadhaar in lieu of the PAN. This isn't just a convenience. It's a powerful, legally backed tool for biometric and demographic authentication. It ensures this new tech-driven tax system stays incredibly robust and evasion-proof.
Let's shift gears to the danger zones. Section 5. Common issues and pitfalls.
Listen up, because this is absolutely crucial. The biggest trap waiting for you post-April 2026 is what the portal calls a system validation error. Like I said earlier, muscle memory is your worst enemy here. If purely out of habit, you or your accounting software quote legacy 1961 Act sections, like typing in 139A for a transaction dated after April 1, 2026, the income tax portal is going to reject it instantly. Boom. Error. You'll face immediate compliance failures. You have got to update your mental dictionary and your firm's software to Section 262.
On top of that, there are some global system-wide changes to the forms you've got to watch out for. First, as we covered, tax year replaces assessment year everywhere. Second, the old RS abbreviation is entirely replaced by the official rupee symbol. And third, and guys, this is a huge one for data entry, to make forms more system-friendly, fields that used to be clumped together like name, address, and PAN have been strictly unbundled into completely separate boxes. If your bulk upload software doesn't adapt to these unbundled fields, your batch filings are going to fail hard.
All right, wrapping things up with Section 6, Summary and Key Takeaways.
Let's do a rapid-fire recap of what you absolutely need to take away from this. 1. Section 262 is your new Bible for PAN provisions, completely overriding Section 139A. 2. Watch that 5 lakh gross receipt threshold. Cross it, and a PAN application is mandatory. 3. Say a final goodbye to Form 60. Form 97 is the new sheriff in town for non-PAN holders. 4. Strictly quote the 2025 Act sections to dodge those brutal system validation errors. And 5. Assessment year is out, tax year is in.
Understanding these foundational shifts is the only way to make sure you, your firm, and your clients transition into this new era of Indian taxation without a hitch. So, as we march toward April 2026, I leave you with this final thought. Are your firm's workflows really ready for Form 97 and unbundled data fields, or are you going to be caught off guard by a wave of system rejections? Get ready now. Thank you for watching. Please like, subscribe, and share. Disclaimer: this video is for educational purposes only and does not constitute professional advice. Tax laws are subject to amendments. Please consult your professional advisor before taking any action. This is an AI-generated educational video.